All right, we're back. Another day, another dollar to give to somebody else. Well, currently we're down still about 250 for the year, um, mainly from the decrease in the Ford and also a slight decrease because of the overall market fallout. I think yesterday, so I wasn't able to look at my portfolio position until after my work because I was busy that day. It turns out that the market decided to crash when I was not looking, and mainly because of the Fed board minutes describing that they're going to accelerate their interest rate hike and also balance sheet, um, just selling off their products and eventually just not helping out the market as much through asset purchases. So that pretty much tanked everything that I have so far, but it's all right. Another reason that this happened, another reason for the lower profitability at this moment, is because the VIX has actually gone up significantly since we last talked. So I think a couple of days ago, it was almost around 16 at the bottom. And as expected, it should go back up, especially when there's something significant like the board minutes. Um, well, currently, I think 2 days ago it was around about 16:30, and now today it's hovering around 19:20. So a lot of these trades were entered into around the 19 mark, so that's expected currently for these positions um, to have either losses because we're still pretty early inside of the time frame for a lot of these options. So, uh, well, you look at American Airlines. We do see that there is about 43 days, and a lot of these also have 43 days to go. We'll see here that Ford is currently going up again, another 80 cents up, which also caused the decrease in the the short call side. Short put side also saw more profitability though, finally breaking even. So hopefully we could grab more credit for the put side in order to achieve at least a break even coming in. So as a recap, when we look at the total amount of credit that we received, we have currently about 99 cents, and it's worth about $1.30, or it's worth about $2.30 at the moment. So current loss right now about $1.31. However, if the price does decide to go up even further, we still have plenty of time for it to either come back, and if it doesn't, then we could roll up even further. Because currently, how we have it right now is that if we look here, we have uh, the roll up. So initially it was at the 17 strike, and now we rolled it up to the 20 in anticipation of this eventually coming back. And if it does come back, we don't want to overshoot where this side loses a lot on the call side and makes us more profitable, but then the new position that we enter into becomes unprofitable. So then we both have, then what ends up happening is that we have a situation where there's no profitability on either side, which is not good. So that's why I kept it around the first standard deviation, moved it from the 17 to the 20. If this price does hover and stay, then more than likely I'll move this up from the 20, probably up to the 21, 22. And if it goes way out, then I might put it down. Like I'm talking, the price goes up to the 29 mark. We might have to put it all the way up to where we have just the iron fly. And so, but like I said, we still have plenty of time, so not too worried. Hopefully down 20 days from now, maybe this will go back down. The premium will go down significantly, and hopefully the VIX at 19 will stay around that price. Historically, it has not gone up that much, but if considering a new policy stance for the Fed, it may be possible that volatility goes back up. So if that's the case, then I'm expecting this cycle to be a wash, or in the worst case scenario, have a loss, but then you could start entering into more profitable credit positions with larger premiums. So I guess overall, like, it's not looking too optimistic for this cycle, but maybe in the next cycle, if the volatility does go up, we can see higher profitability. So with that in mind, there are some other positions that have still maintained profitability, even though the S&P has gone down significantly. So as we see emerging markets, still as the price goes up, we have seen increases in our profits for that. Looking for a break even, looking for a profit taking at around 50%. So currently about $25 more to go. With the current cost or credit receipt at 90, you could potentially buy this back at $45. And see, everything else seems like it's kind of halfway in the green, halfway in the red. The only positions that do need to be monitored currently is the Ford position. American Airlines, like I said, this one's more just of a shot in the dark, and if it does come out to where the American Airlines goes up, then we make some good profits. But if not, then we probably have a loss of about 500. But hopefully, considering if the Tasty trade does do what it says and has consistent profits over time, that would probably be a drop in the bucket. So I think that's pretty much it for today. Nothing too much to talk about. I think yesterday was the biggest drop that we've had, but today we pretty much scratched for the day. It's been hovering around a loss of about $6 to about a gain of about $20. So we'll see tomorrow if the markets do want to catch up or do want to go back up. I think we've seen last time in the Fed minutes when they were talking about changing their policy stance. Markets initially crashed down and then quickly recovered. So this is day 2 will be tomorrow. So it'll be interesting to see whether or not the markets do want to play the upward momentum still, or if they want to for once take the Fed seriously with their less accommodative stance that they're planning to have for 2022. But so for now, I'll still stay with the positive delta. I don't want to adjust my position too much, considering that this was a one-off event, which was a surprise, and maybe the markets, once they digest all the news, will continue to shift upwards. And so we'll take a look. And I think with that, that's pretty much all I have for today. So we will continue to monitor the Ford position and just keep on going from there. All right.